President Bola Tinubu has signed the Nigerian Insurance Industry Reform Act NIRA 2025, marking a milestone in modernizing the sector and advancing the government's $1 trillion economy vision. The legislation replaces outdated insurance laws, imposing stringent capital requirements, enforcing compulsory coverage, and mandating digitalization. It also introduces deadlines for claim settlement, policyholder protection funds, and participation in regional schemes like the ECOWAS Brown Card system. The reforms aim to boost consumer confidence, attract investment, and transform Nigeria into a regional insurance hub. Joining me for more on this, I have Olufunmilola Adebowale, Head of Research, Parthian Partners. Thank you so much for joining me today.
Thank you for having me.
All right, we now have the NIRA. Talk to us about, the positives for you, the provisions that sort of interest you, and maybe the ones you're not so comfortable with.
Yeah, so I would say that I'm really excited about the bill. If you can remember, the discussion has been going on since 2008, and in 2010 we had a formal document, but since then there's been back and forth and all. So I'm particularly excited about this because it's going to go a long way in helping Nigeria achieve its $1 trillion economy. Then looking at the provisions in that act, there are basically 6. One of those 6, there are 2 that actually stood out for me. Number 1 is the fact that there is now zero tolerance for delay in settlement of claims. So that is something that Nigerians have been complaining about, because it's easy for you to say, okay, I want to buy into this product, I'm paying my premium. When it's time for me to, get my claims, it takes forever. So now we know that, okay, there's now a regulation that is guiding that. So that's going to at least build some trust in Nigerians and be able to take advantage of the opportunities in the insurance space. Then the second thing for me is the fact that now the insurance industry is now digitalized. So that is very important because it's going to increase access to insurance products, and there will also be efficiency. I just renewed my vehicle insurance, and it took me minutes, in fact, from the comfort of my home, to actually get that sorted, compared to before that I have to go to the office. And also, I think those 2 provisions are actually I'm actually excited about them, and I believe that when it is implemented properly, it's not going to just have a positive impact on individuals. Even as an industry, we should expect to see an expansion in that industry, which will trickle down to the Nigerian economy.
There's this challenge I personally have, and that's the fact that there was this insurance product I bought into, and then, I ran it for about 3 years. Okay. Nobody sent me any reminder about, maybe premium renewal. And then even at maturity, I had to start telling them, oh, God, it has expired, it has matured, give me my money. Like, I really had to, at every point in time, I was steering the conversations, and I was like, I thought you would be concerned about the fact that you have a customer and you would want to remind the person. So what happens when I somehow miss some renewals just because I wasn't reminded of something? I don't know if this particular act, provides for issues like that.
I understand how frustrating it could be, but I can really say that they've been improving in that regards, because I remember, I think a week or 2 before my car insurance expired, I got a call from at least 2 insurance companies saying, oh, your insurance will be expiring in 2 weeks. We are available. We'll bring it to your doorstep. And also, I think they've begun that process. We are seeing that improvement. Now with the act, we should see a lot of improvement in that. And that will be possible to be a game changer, actually, in the industrial industry, in the insurance industry, rather, this period. So we'll see a lot of improvement. Don't worry. Just
if I don't see improvement, I should report them to NICOM.
Of course.
Okay, that's
fine.
And
they'll be penalized. So I'm sure because now there's a regulation surrounding it, all companies will have to, up their game to ensure that they are not being penalized. I'm sure there'll be penalty that, okay, if you default and all. So with that in place, we should see a level of improvement. Another thing is that there will not be healthy competition in that space. So if we have, at least the big ones we have are we have more than 10 big insurance companies. So if I'm getting quality service from you, it's seamless and all. In fact, I'll be your marketer. Most times, the seamless marketing comes from customers that are satisfied. So if you understand that I need to satisfy my customer and they will be like the next marketer for my product, then you want to do your best. And now that you have capital to raise to meet up with the new requirements, let's wait and see. You see a lot of improvements in that space.
But I want us to focus somehow on that recapitalization. I know some persons had issues with it. They are saying this is probably going to, we're going to see some mergers and acquisitions. And I remember there was even a report that was talking about how that maybe some of these offshore companies will probably take over and buy over the Nigerian companies. And at the end of the day, the industry will be taken over by international companies. But what do you have to say about the recapitalization, the impact it's going to have, and maybe address some of the fears that, some persons have about it?
Yeah, so I would say that it is long overdue. So it is important now, as a country, we have a goal. We want to achieve a $1 trillion economy. And the financial services industry will play a major role in achieving this. And it started with the banking industry, the recapitalization exercise. And we are seeing different strategies that different banks are coming up with to be able to meet that strategy and to meet the requirements. We will see the same thing play out in the insurance industry. A number of them will have to sit up to come up with strategies on how to meet those requirements. It could even involve them going across beyond the shores of Nigeria to raise that. So I think it's a good development. It's something that will help to expand the capacity of the insurance industry to be able to increase their underwriting capacity. And you know that before now, there was a report that was released in Q1 that about 40% of insurance businesses was seeded outside the country. So now with this new capital requirement, it will increase the ability to be able to take on large projects, especially in the oil and gas industry and aviation industry. So once they are empowered to be able to take on those risks, then we'll see some of those funds that are going outside the country stay within the country, which will mean that it will even increase the level of jobs because you have more business activities to. So I think it is very important. It is very key this period. So it is important. It is done alongside.
All right, let's close on this. I mean, the insurance sector. When you look at the capital market, equities. Equities to be precise. We can see the movement. What is this saying? Doesn't mean we should pile in, or we need to begin to look at some other factors before taking out, because people are really taking position.
Exactly.
I mean, insurance stocks are hitting the daily 10% limit highs. Talk to us about this.
Yes, so since Monday that we heard about the signing of the Bill into Act, so we've seen most of the insurance companies have moved, I think, by a minimum of 30%. So while that is good, it's also important that we take caution. Number one, the bill has been signed, and these companies will have to come up with the strategies for them to meet the new capital requirements. So that's going to also affect the industry. And don't forget that anytime the market also rallies to a particular point, for people that bought high, in December, insurance companies' share price also rallied because of the capitalization thing. But when it didn't pull through, we saw some pullback. So people that bought at that particular point in time could see it as an exit opportunity. So we have to be cautious in that. Then another thing, it's also important that we get clarity on what particular strategy each company will adopt. Because for those that might not be able to meet up, we could see some level of merger and acquisition in that space. So you want to be clear to know, okay, which are the companies that will be able to meet up.
So we shouldn't pile in now. We should wait and see what their strategies are.
And you also have to
wait until when the price now goes very high, and it becomes a problem. We'll talk about this later.
The fundamentals as well, the fundamentals of those companies. So you have to be sure of what you're buying.
We'll have this conversation some other time. Thank you so much. It's been a wonderful show with you, Olufunmilola Adebowale, Head of Research, Parthian Partners. Thank you for coming. And that's it on this edition.